This is lesson 2 of the Accounting Utilities, Chapter 4 in the new client exercise handbook. So in the part 1 of Accounting Utilities, I've done things a little bit out of order. We went over the receipt utility, purchase order utility, and payment utility in a lot of detail. And now I'm going to jump back and go over those utilities are more common utilities that you'll use. Here are some of your more rare utilities, and we're going to briefly go over most of those. We'll camp out a little bit on the fund balance adjustment utility. So let's first start off with the checking transfer utility. And that is on page, page 70. Not much to it, actually. The checking transfer utility. Turn to that page in my book, but probably the easiest one we've got here, because there's not a whole lot you can do with it. So you go to Accounting Utilities. Remember, checking transfers are for that transactions for only customers or UN clients that have secondary checking accounts. So if you only have one checking account, and maybe you have investments, but you only have one checking account, that's your primary checking account, you have absolutely no need for the checking transfer transaction, and so the utility is not useful either. And so I'll click on Accounting Utilities, Checking Transfer Utility. For those of us who have secondary checking accounts, we can see that, again, this doesn't correspond necessarily to our examples in the past, but at this entity we had the grant account, and we only have one option here. We can display whatever we have listed. So if I look at both of these on our list in the checking transfer utility, I can see that we opened this secondary checking account for $10,000 at $10,000, and then later on we moved $2,000 back from the secondary checking account to the primary checking account based on what we have here. You can't void or adjust or do anything with this. It's one of those areas where if you need to reverse this, maybe you really didn't mean to do that, or you did this for the wrong amount. It was only for $1,000, and you record it here in UAN as $2,000, or maybe it should have been for $20,000. Well, you wouldn't reverse that here. You wouldn't void that, and wow, that doesn't make sense. $10,000 to $20,000. Let's say this should have been for $200 into the primary checking account. Actually, if we look at that, we can see this corresponds to a check that was wrote out of the grant checkbook, check number 1544. And the actual check is not recorded in UAN rights. It was recorded by transferring it to the primary checking account and then recording an electronic charge payment for the amount of the check so that it's deduct from your cash balances. Well, let's say you only got this far. You recorded the checking transfer, but you typed in an extra zero. Should have been $200. So you want to reverse that. You would just go back to Accounting Transactions, Checking Transfer, and put that money, that $1,800. Put the date. Correction. Back into the primary, and this will have to close this for it to update. But now I can see my other action. I put the $1,800 back. Now I can go record that electronic payment for $200, and my bank reconciliation will be in sync with the actual check I cut out of the grant account. So that's the checking transfer utility. Pretty simple screen. All right, so I'm going to skip over fund balance adjustments, and we'll go to, because these other ones are pretty straightforward as well, we'll go to page 74, the interfund transfer utility. So accounting transact utilities, interfund transfer utility. Those are the cash transfers that actually the one cash transfer we recorded when we moved, we moved $1,000 from the general fund to the road and bridge fund. Only thing you can do there is display it or void it. So display, we can see that transfers. We moved $1,000 from general to road and bridge. Well, if for whatever reason, let's say maybe this should have gone to a different fund, and I sent the money to the road and bridge fund, should have gone to the gas fund or something else like that. I'm not making that up. Well, I don't have to reverse an interfund transfer. I can just void it from the system. So I'm going to void that by selecting it, clicking on void, select the date, and I can print a report for my records, and now it's there and the status is voided. So at that point, print my fund status, I'll see that my general funds now increased $1,000 cash, and road and bridge decreased by $1,000 cash. It will also free up the appropriations in the 1,910,910 account, the transfers out account, so that I can spend that budgetary amount. It doesn't show it here, I guess. It'll free up that $1,000 so that I can spend it or do a cash transfer to some other fund. So that's the interfund transfer utility. And then next is the interfund advance utility. Same idea. Well, here I recorded a few other examples. These were the examples in the book, just $50. Remember, I think I put in $50,000 when we first did this, but in our data we have $50 was advanced and loaned from one fund to the other. Again, the road and bridge in our examples earlier in class. And so it was a loan to road and bridge, and this was the initial advance. And then we paid back the general fund from the road and bridge, $50. Well, you can see here that I can void it, but look what happens when I try to void that initial advance. Notice it says status repaid in full. When I click on void, select the date, and I get an error message. And it says advances that have been partially or fully repaid and may not be voided if all repayments, may only be, advance has been partially or fully repaid and may only be voided if all repayments for it are voided first. So in other words, I can't void this initial advance because I've already had a repayment advance associated with it. So I have to do them in order. So I could void the repayment, you see the type listed here, and then void this one. Or here's another example. I have one that's open, but I have no repayments associated with this other advance. So I can click on void, select the date, and print a report, and now that advance is voided. So that's all there is to that type of adjustment, or utility I should say. So that covers everything in this lesson except the fund balance adjustment utility. So let's select that. And we've got about 3 exercises for that. That starts on page 70. So again, you go to Accounting Utilities Fund Balance Adjustment. I've got nothing listed here yet. So I'm going to click on the Add button, and you get a warning message when you select this. It says, fund balance adjustments should only be posted when absolutely necessary. These adjustments will be scrutinized closely during your audit. So it's saying be careful here, because you're not going to get this one past your auditor. You should only use this when you're going to need to justify it. And there are justifiable reasons to make fund balance adjustments, but you don't want to take them lightly. So we'll click OK. And so this is the fund balance adjustment form. And you can see that the first thing you have to do is select a fund. And we've got three options below that, the adjustment types. Well, the prior year warrant adjustment is used for adjusting or voiding a warrant posted in a prior year. So it's typically it's used for voiding warrants that didn't clear on your bank reconciliation as of December 31st. They're outstanding as of December 31st. You're into the next year, maybe go back several years, and the check never got cashed. Well, you cannot go to utilities, payment utility. If you look at that, you'll notice that we do have, if I sort by date, we do have a warrant that posted in December of 2010, last year. If I try to void that, I get an error message. Okay, I cannot void a prior year warrant here. I must do it as an adjustment. So so we'll discuss what the adjustment does. The other type is a prior year receipt adjustment. This is used for adjusting or voiding a receipt posted in a prior year. We've got the same type of example in our receipts. We have a receipt that did not clear the bank reconciliation as of December 31st. Maybe it was deposited on December 31st, and that December 31st happened to fall like right before a weekend. It didn't post until January 3rd, I guess, do my math right. If we modify our 2011-10 calendars, and didn't post until the next year, then it was outstanding as of the bank reconciliation, so it carried over, and we can't void that in the receipt utility. We'd have to do a fund balance adjustment if there was a reason for voiding the receipt. That would be unusual, but what more common is going to be your prior year warrant void. Lastly is the audit adjustment. This is used for posting a fund balance adjustment that your auditor has requested. So maybe you're being audited for 2009 and 2010. Your auditor gives you instructions on making adjustment. We'll have an example for that. And then finally, the fund balance correction adjustment. That's used for posting adjustments for reasons other than the above three. So that's basically you taking it upon yourself saying, I need to do this adjustment, and I can justify it to the auditors. That's the one you're going to have to back up especially. You'll have to back up all of these, but this one is the auditor didn't tell you. You just have to do it. Or maybe they did tell you, but it's not during your audit, maybe through some other consultation. So let's look at exercise number 1. That's voiding a prior year warrant. So that's on page 71, and we're going to choose the general fund for that. We'll select prior year warrant adjustment, and then we've got this section that opens up the section down here. It says the warrant number, and our warrant number, we only have one listed, and that's carried over from 2010, and that's our when we select that. So if we had several that were outstanding as of December 31st and they had not cleared on the bank reconciliation yet, then they would all be listed. But this one was just for $20, and we'll say that it was an error. We posted 2 checks for $20. Buy lot stores already cashed the other check, this one we have sitting on our desk. We don't need, it's never going to be cashed. We already voided it on paper, and so we just need to record that in UAN. And so let's see, that's on 72. We're going to select the date of the adjustment. I'll just put in today's date, make it simple. And then a reason for the adjustment is required. Just well, in this example, it's actually a lost check. So say we're going to, I made that up, but we'll say, per the book, this was a lost check. So another type of example. And so they lost a check, and we want to reissue it. In 2011, this was a 2010 check. So first we need to void it. Well, this effectively voids the check by typing in $20. All right, it's a $20 check that was cut before. And what this will do, it'll increase our cash balance in the general fund by $20. So this gets people a lot. Often when they do a fund balance adjustment, they'll put in a minus for a warrant that needs voided. They'll put in a minus $20, and that would be the wrong way to do it, because you have to think back to the prior year and what happened when you posted that payment. What happened to your cash balance when you posted that payment? It reduced your cash balance by $20. When you void the check, normally if it's in the current year when you void the check, what happens is it increases your cash balance, right? To reverse the expense, it increases your cash balance. And that's the same thing when you record a fund balance adjustment, is you're plugging in a number for and increasing. So it shouldn't be a negative, it should be a positive. You're going to increase your cash balance by $20 to reverse that, that transaction from 2010. Now this will not affect your prior year reports in 2010. This date is just for the record. It actually affects your cash balances as of the date that you click this post button, which is going to be in 2011. So be aware of that. That's true for all of these adjustments. It'll increase or decrease your current year cash balances. All right, so I'll click Post, and now I've got my record of that. I could close this from a report. I'll say no. And notice there's nothing. I can't void this. If I made a mistake, maybe I put in a negative $20 when it should have been positive. I realized my mistake. I cannot void this fund balance adjustment. I would have to reverse it. So, okay, and I would still select the same information, but I would reverse it by putting in the positive amount. Now, everything was all right with this, so I'm not going to worry about it. Notice this little question mark. It says to void a prior year item on the next bank reconciliation, a prior year item adjustment must be posted with that item here. And we'll see about this when we get to the bank reconciliation, but basically this check number is listed here. Well, it's listed here, the check number 10,000 or 10,001. It's going to be on our bank reconciliation, and we've got one more step. We'll need to click on a void button on our bank reconciliation to remove it from that bank rec. So that's what that message is about. All right, our next example, exercise 2, is voiding a prior year receipt. And same idea, we happen to have a receipt that carried over, was outstanding as of 2010, and that would be, like I said, more of an unusual circumstance than a prior year warrant adjustment. But that kind of thing does happen. Maybe the vendor sent us back we deposited a check, and then losing my train of thought here. The vendor, that would not be a good. Then we send the vendor. That's not a good example. Well, for $200, we might just say that for whatever reason there was a bank error and it did not clear as of 2010. I wish I could think of another example right now, but there are rare occasions where you might have an outstanding receipt, very rare, where in the next carries over from one year to the next, and you need to void that receipt and maybe re-enter it as a different amount. Maybe this was entered in error, or and you can't make that correction. So this would be one way to do it. When you do a prior year receipt adjustment, it is going to be a negative amount because originally this increased our cash balance in the general fund. So now we're going to decrease it in order to avoid that transaction. Here again, I'm just not looking at my example. This is a result, the check bounce. This was a bad check. That's what I was trying to think of. And it didn't clear the bank. We've found out from the bank after the year end that it was a bounced check, and so we need to void that. We eventually collected the $200, but that was a different deposit in 2011. So, but we have to accurately mark this check as the deposit as void, and so we're going to post this, and it'll. This is, I guess, our part of the step. We'll decrease our cash balance, and then we get the goods check that we hopefully collect from that vendor, that source of revenue, and post it as another receipt in 2011. So this will increase or decrease our cash balance to void the receipt. All right, exercise number 3 is, again, picking on the general. No, this one is on the general fund and the road and bridge. And this is an audit adjustment. So I'm going to start with, this requires 2 fund balance adjustments. And this would be like, maybe an example, the auditor tells you specifically they want to reclassify they're doing your audit for 2009, 2010. They say, back in 2010, you had this transaction which increased your cash balance in the general fund by $250, or I'm sorry, it increased your cash balance in the road and bridge fund by $250, and it should have increased your cash balance in the general fund instead. That was, you made a mistake, we found it on the audit, and I want you to correct it. Well, now it's 2011, you cannot modify 2009, all right? You can't go back and change your reports, but the auditors want you to correct your fund cash balances. And so you have to do that in 2 steps. First, adjust your fund balance in the general fund, and then adjust the road and bridge fund. So step 1 is, you can do it in either order, but step 1 is the general fund. We'll do it that way. It's audit adjustment, and that was for $250. Increase our balance, and just for the record, we're going to input 2009, telling our future auditors that this was for an adjustment that the auditor caught in 2009 for 2009 audit. We'll just put today's date of the adjustment, and the reason was audit reclassification. In reality, you probably want to put a lot more detail here, maybe even the auditor's name. That way, when you get your audit for 2011 and 2012, that auditor who asked you, hey, what about this fund balance adjustment, right? Because these are closely scrutinized. Why was that? Well, if you don't have the reason in here, you're not probably going to remember why you did this 2 years ago. It's good to put in some a reason and maybe cross-reference some other notes that you have, so that your auditor and yourself will have an understanding of why you did this adjustment. So okay, so I'm going to increase the balance in the general fund by $250 and post it. Then I'll record another adjustment to the, we can see our fund balance here, to the Road and Bridge Fund, audit adjustment for minus $250. Same thing, 2009, today's date. And I mean, you could maybe backdate it to the January 1st, depending on the situation. And then we'll just say again, audit reclassification, and post that. So there we've got a nice record here. If we go to close this, print a report, this is actually a very good report to print. And you can find this report under Reports and Statements, Fund Balance Adjustments Report. That's a great report to print out, and I'll just display it real quickly here. It shows you everything we've done with our adjustments, and including the reason, and that's a good report to hand to your auditor. They may ask, hey, I want some evidence that you took care of this, and you can show here, yes, I reclassified my funds. You also could print a before and after fund status. Definitely a very good idea to do that. I've mentioned that many times, and this is probably one of the best cases where you'd want to print a before and after fund status so you can show the change in your funds for your, not only for audit but for your own peace of mind. And again, a very important point is that this affects the current year. Sometimes I'll talk on the support line with fiscal officers, and maybe they've had an IPA tells them do a, or even a, one of our state auditors, you need to reclassify these funds, and I want you to do a fund balance adjustment. And they're looking at the 2000 prior year information saying this needs to be reclassified. They're just pointing out an error and saying you have to fix it. You want to look at, before they move on to another audit, okay, you say, okay, I'll take care of that. If you don't do it right away, and then that auditor moves on to another audit, leaves your, leaves that audit and moves on to another township, if you come back later and look at that and say, wow, if I do this fund balance adjustment my auditor told me to do, it's going to put that fund into a negative fund balance. And UAN, doesn't, I mean, you shouldn't have a negative fund balance in a fund. Well, then you've got a problem. The auditor's already moved on. You need to give them a call. Of course, they've got other things on their mind. So you want to look at, if they ever tell you to do that, you want to look at the effect, look at your fund status, and look at your budget for the year for those funds, and see how is this going to affect. Maybe it doesn't put you into negative status right away, but maybe 2 months from now, when you got to make that big check, pay that big payment, you're going to be in a dilemma. And at least call them and say, hey, this is the effect it's going to have, in this current year. Is that my only option to do this fund balance adjustment? Maybe it is, but at least you ask the question, and before you get into a really sticky situation. So that's just a little bit of advice about fund balance adjustments. And that's it for the part 2 of accounting utilities. The last part is on bank reconciliations and the bank reconciliation utility.